All right, today we're going to strip trading all the way down to its bare essentials. We're diving into the ideas from the book Naked Forex, which, it promises a much simpler, maybe even a more powerful way to read the markets. So let's get into it and see what it's all about.
If you've ever even thought about trading, this quote probably hits close to home, right? The internet it's flooded with these gurus, these instant experts, all promising you the moon with their super complex systems. It's totally overwhelming. And let's be honest, a lot of the time, it feels like you're just being sold a high-tech version of old-fashioned snake oil.
So this kind of forces us to ask a really big question, one that challenges, well, everything you've probably been told about trading. What if the secret to actually making it isn't about adding another complicated indicator to your charts? What if? What if it's about taking them all away? What if the answer has been right there, hiding in plain sight this whole time?
Okay, so to really get this naked approach, we have to know what we're taking off, right? And that's technical indicators. So what are they really? Well, at their core, they're just fancy math problems. They take historical price data, the open, the close, the high, the low, and they run it all through a formula to spit out a number or a line on your chart. That's it. And this leads us to the first and maybe the most important insight from the book. It's so simple, you could almost miss it. Every single indicator out there, I don't care how complex or fancy it looks on your screen, it's created from one thing. Just one. And that's price.
So think about that for a second. If every indicator is just a calculation based on what price is already done, what does that actually mean? Well, it means they all have the same massive fundamental flaw. They all lag. An indicator is basically a rear-view mirror for your trading. It's fantastic for showing you where you've been, but it's not so great at telling you what's coming up ahead. The book makes this point with just a brilliant analogy. It asks this question. Imagine you took your wristwatch. Could you somehow manipulate time itself just by running a formula on the hours, the minutes, and the seconds displayed on the screen? I mean, that sounds completely absurd, doesn't it? Right? Of course it does. And that's the whole point. So why on earth would we expect a formula that's just based on past price to predict future price any better than, than price itself? It's this huge logical leap that so many traders make, and they never even stop to question it. Okay, so if indicators are really just a lagging shadow of what the market's doing, what's the alternative? Well, the solution, according to this philosophy, is to stop staring at the shadow and start looking directly at the thing that's casting it. It's all about learning how to read the market's raw data, the price itself. And this really simple idea builds out into a super clear 4-step philosophy. Step 1, the price on your chart. That's your only indicator now. Step 2, you stop drawing these perfect tiny lines and you start looking for bigger support and resistance zones. Step 3, you wait. You patiently wait for a clear price action signal to show up in one of those zones. And then, and only then, step 4, you execute and manage your trade. So what in the world is a zone? This is a really key shift in how you look at a chart. It's not some razor-thin perfect line at an exact price. Nope. Think of it more like an area, a region on the chart where the market has bounced before and where it's pretty likely to react again. These zones, that's where naked traders are looking for their opportunities. And to help this idea really stick in your head, the book uses this absolutely fantastic, kind of funny analogy. It says, a zone is simply a big, fat beer belly. Think about it. It's not precise, right? It's a little fuzzy around the edges, but you can't miss it. You know it's there. It's just a perfect way to remember what these areas on your chart really are. Now, here's the thing. Once you've found a zone, you don't just jump in blindly. No way. You wait for what the book calls a catalyst. Basically, a specific price pattern that screams, hey, the market might be turning around here. They have these really cool names, like the big shadow or kangaroo tails, which is basically when price pokes its head out of a zone and then bam, snaps right back in. Those are your signals to pay attention. So let's just put these two approaches side by side for a second. With indicator trading, you're staring at all these different lines and graphs trying to make sense of them when they're probably telling you different things. And what usually happens? You get in late. But with naked trading, the whole process is just cleaner. You find your zone, you wait for a clear price signal, and you get in right at that potential turning point. And why does this matter so much? Well, because without a simple, solid method,
So many traders get stuck in what the book calls the cycle of doom. And I bet this sounds familiar to some of you. You find what you think is the perfect system. You trade it, you're excited, until you hit a bad losing streak. Then you blame the system, you say this thing is broken, and you're right back to searching for the next holy grail. It's this super frustrating and honestly really expensive loop to be in. So how do you break the cycle? The key is realizing that the answer isn't out there in some new magic indicator. The only way to break the cycle is to stop searching and start building. It's about picking one clear method and then putting in the work to develop real, actual expertise through practice. And trust me, building that expertise is what separates the winners from everyone else. I mean, look at this number. A report back in 2011 found that only about 25% of traders were consistently profitable. That's it, 1 in 4. This clearly isn't a game of luck, and just having a system is nowhere near enough. So what do those 25% have in common? What's their secret? Well, it's not some hidden indicator they paid thousands for. It's the simple fact that they don't just find a system. They practice it. They rigorously backtest it over and over and over until they know it inside and out. Okay, so what is backtesting exactly? It's pretty simple, actually. It's the process of taking your trading rules and applying them to old charts, to historical price data. You're basically getting in a time machine to trade past market conditions. This lets you see if your system even works, build real confidence in it, and get tons of experience, all without risking a single penny of your hard-earned money. And when you do this, you're really trying to achieve 3 things. First, you figure out if the system even fits your personality and your life. Can you actually trade it? Second, you build this unshakable confidence in your method, so you're not second-guessing every single trade. And third, you just accelerate your learning like crazy. You can get years of screen time experience in just a few hours. This all brings us to a really powerful quote from Sun Tzu. Every battle is won before it is ever fought. And that is so true for trading. The real wins don't happen when you click the buy or sell button. They happen in all the hours of preparation, all the practice, and all the back testing you do long before you ever risk real money. So this really leaves us with one last big question that you have to ask yourself. The next time you pull up your charts, take a hard look and be honest. Are you actually trading the market, or are you just trading its shadow?